Okay folks, welcome back. This is going to be the Optimal Trade Entry Pattern Recognition Series mentorship version of the reviews for examples 12, 13, and 14 in the series. It's on the YouTube channel. Alright, and the first one is the Mexican peso futures contract. And we're going to be looking at the move that was here up, but I want to bring in the dollar versus the Mexican peso on the Forex. This low in here, what we're looking at is this particular day here. Now, everything in this chart is going to be the opposite of this. Okay, so the dollar versus the Mexican peso is going to be a mirror image of what was shown in the futures contract for the Mexican peso. Again, the first pair or currency in the pair, dollar versus Mexican peso. And again, you're not losing your mind. This pair is just helping me illustrate something with this underlying currency. Okay, so if this pair, dollar Mexican peso, goes lower, that means or implies that the Mexican peso is rising, okay, against the dollar. So we have the low over here, and this particular day is what's being looked at. Now on the dollar Mexican peso pair, it looks like it goes down. Okay, in other words, it would be a short from here going down to get in sync with it. The opposite is being said here. In price action, it's going higher. So this return to this area over here is the same thing that's being seen here, just in the opposite. And it may be a little confusing, but once you watch this video and look at the chart yourself, it'll be very clear as to what I'm referring to. But if this is weak, and we've already went below this low here and it rallied up, all it's doing is a immediate rebalance to this candle. So all of this down close candle here, which is this up close candle here, it trades back down into it, whereas it trades back up into it here. So everything's a mirror image. So with that said, let's look at the details here, and I've changed the optimal trade entry to reflect the bodies of the candles and on this price swing here. Okay, with that said, it still trades down into it at the 8:30 time period for the New York session window opportunity for trading. I don't want to use kill zone because it's going to confuse the new people here, because we have a very specific time frame for kill zones. But the 8:30 to 11 o'clock in the morning, 8:30 starts it here, and bodies to bodies projected up takes us to 04389, and beautiful little reaction there, and then 0440, and that does trade to it later on there, and it's really nice to see that right there. Beautiful market symmetry for this pair, and it runs previous day's high over here, the 21st, which is running the previous day's low here on this day. And it's in sync with moving lower. So daily bias used here helps frame this trade here as a long. Alright, here's the dollar CAD. This is our 13th example in the series. And we're looking at the price swing here. And what's being highlighted here is we have the short-term high within the optimal trade entry and the fair value gap here. So I'm going to take the fib off just to illustrate that for a moment. So here is the fair value gap, and I'll take that off too so you can see it. Candle low, candle high, portion in the body in the middle. Bodies of the candles respect that perfectly and run buy side liquidity on this short-term high. The market's allowed to trade lower. Adding the fibs back, 137.57.5. Low comes in at 137.57.5. Beautiful, beautiful market symmetry there. Market does come back later on, trade back into a bearish order block, but the market environment has already been established here, and it's going to go lower as a result, and it trades back up into a mitigation block there, right here, and then rolls over into our final target. Okay, so this is our last example. This is the British pound versus the US dollar. the market is showing this retracement here. It's only anchored over here because I want to extend it from this high out, and you see me do that on the videos. But this low to high is what's being highlighted. 62% retracement level comes in right here, and at that moment, if you look at the fib being removed, you can actually see the fair value gap right there. So you can see that's what we're highlighting right in here. And it goes a little bit beyond that, but that's fine because your high would be protected with a stop loss above that. Market trades up into it, creates optimal trade entry, expands down, runs into our targets as indicated in that YouTube channel video. If you look at the price leg from this low to this high, and we'll do that now, and I'm dragging the high down to the low right there, and it takes us down to 1.22 and 8 and 1 pipettes. So 122.08, and the low comes in at 122.04 and 3 pipettes, so within 5 pips variance to the projected high, or projected low in this case here. So what I'm doing is I'm measuring, this is all swing trading ideas just applied in intraday price action. So we have the low to the high. Once this low is broken, this becomes a fulcrum point. Okay, so everything that went up in terms of distance and magnitude, once it breaks and starts moving lower, it's just a simple measure move. Okay, it's all this is this low to high, that same range is down here with 1 standard deviation. So everything that's shown from this low to high in terms of range, and I'll show you exactly what I mean by that with just a simple rectangle. It'll be clear to see it, because for whatever reason it confuses folks when I do this, and I don't see it, I don't understand. So here's that move up. If this low is broken in the future like it does here, we can project that move down by just simply taking this box and putting it right on the low. Right there's the low, and bam, and look at the bodies respecting it. Yes, you get a little bit of a tail action in there that's variance, but that's fine. It's normal. We're looking at the bodies of the candle to get the bulk of the volume. And that, my friends, is going to be it for this one. I will be back tomorrow to do another set of videos, but I'm going to do them like this time. It'll be 6. I'll do 6 of them to finish out the remaining balance on that series. So we'll be doing the 15th, 16th, 17th, 18th, 19th, and the 20th example all in one video. And then you'll have Saturday, which I won't be doing anything, and then Sunday's video will be the weekend edition of the ICT Mentorship commentary. Until I talk to you then, I wish good luck and good trading.